Good morning, trading world. It is November 11th, 2022, 8:16 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. I have been saying, which seems like months now, that we would get to the upper 390s. Going back to the pre-market done November 7th, 2022, the exact quote was, the recent uptrend has not been broken. 368 is that break level. And two, I have been saying for some time we will run up into the 390s, more specifically 393 to the 400 area. Now what do we do that we're here? I have already started layering on bull VIX call spreads. Today won't be easy for shorts because this has been a freight train to the upside, and no one wants to be run over by a freight train. So the first step is to again have patience, because we have some huge gaps in order flow which may have us go through some free fall early in the session. This definitely has me looking at the setup for bearish divergence on the daily time frame. I would like to see the daily time frame reach overbought levels on a few indicators, but the end of the day today will be the best time to get short indexes, period. I started picking shorts in individual stocks yesterday, like Apple, Merk, Mcdonalds, Schlumberger. If you want to ease your way short in front of a freight train, I suggest using spreads. It limits risk to defined amounts. I got short yesterday just because there was a chance we could pull back a good bit before touching 399, 400. But end of day shorts will begin to get heavy for me towards the end of the day if we get the daily chart completely into overbought territory in preparation of a huge gap down coming soon. Another thing to remember, the bond market is closed today. This sets us up for a huge surprise Monday, because the impact that bonds have on the market are not being fully realized by all right now. The last 3 days in the bond market were the beginnings of a nice rally. I warned of the bullish divergence last week. If money starts to find its way to the bond market, it will be taken from somewhere, mainly the equity market, which could mean a swift, huge drops coming in the equity market. Let's get into the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance, 398 to the 399 level. Queen resistance, 400 to the 401 area. And then King resistance, 402 to the 405 area. On the support side, we have our Jack support at 396 to the 395 area. Queen support 391 down to the 390 area. And King support 389 to the 388. I kind of feel like I should kind of stretch this down to 386. Because it is quite possible for us to find our way to that 386 area, as it is the point of control for today. But just keep that in mind. The main thesis for today is bullish, closing above the 394.69 with a projected target high of between 395 and 405. Just because the main thesis is bullish, that doesn't exempt us from taking a dive early in the day and then fighting our way back up to that positive close. The alternate thesis is bearish, closing below the 394.69 with a projected target low of between 394 and 386. The current major channel we're in is 379 all the way up to 397. The current major channel above that is 397 up to 416. We do have a dissonance between the technical, which is bearish, and the quant side, which is bullish. As of yesterday, we have conquered all that leftover order flow that I was talking about over the last 2 weeks. Now we have massive amounts below us. So from here, risk is to the upside and reward is to the downside for me. That brings us to the scenarios of the day. All right, the first scenario is going to be our expanded range day structure. We could have an initial drop lower, find support, and chop back and forth, then higher towards the highs of pre-market and maybe a little more. That's our expanded range day structure. All right, our second scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. That is our rounded reversal day type structure. I do want to give an alert or vice versa alert, because we could also still have a rounded reversal vice versa move, which would look pretty much like this, where we would get a continued push higher toward the jack or queen resistance area, find our midday chop around either the queen or king resistance area, and then end up the latter part of the day coming down with the same amount of force that we went up with the first part of the day. So that is the vice versa scenario on the rounded reversal day type structure. The last scenario is our trend day up. We could open gap up, start with a slight fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance. And not all the time, but a lot of the times in this model, we do start the second part of the day with a head fake looking to continue the primary trend and then find ourselves fading into the close. However, this was pretty much the theme or instance that happened yesterday. And I was looking for what happened yesterday to happen today. So things could play out a little different, although it is rare. It is possible to have 2 trend days back to back. But with volatility in the realm of where it is, it makes it possible for us to have those back-to-back trend days. It's more relevant for us to have back-to-back trend days because of where volatility is. So we want to be aware of this just in case. But today I will be paying full attention to the close as far as how we close, where the indicators are, because I'm looking for the daily, some of my daily time frame indicators to reach certain areas to where I will feel comfortable setting up huge short positions if we're in that overbought area on the daily. So if we don't reach it, I won't set as many, but I will still set something. But if we are, I will set more. I'm willing to put more money at risk if we're in that overbought territory on the daily. I hope this helps. Your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on each position, and we manage this risk in accordance to our account size. This is a very important time. A lot is going on, and even though it may seem as though this could be the unwinding or the end, I am still expecting that we are going to be in a large consolidation through the end of the year, with maybe a couple peaks below lows that we've already experienced. So keep that in mind. I expect for the worst to play out in 2023. With that being said, I hope this helps. Let's go out and have a positive trading day. Actually, let's go out and make it a great one.